Today, folks, in this ever-dynamic stock market where last week this company was able to call this company a PDF file without any ramifications into this week, where all eyes today were on Apple stock with an incredibly disappointing event leading into some iOS updates with hopes of AI integration, to only see ChatGPT, OpenAI partner with Apple on some image generative software. People were incredibly disappointed by this as Apple trades at a wicked 31 times valuation with virtually no revenue growth in this current market environment, which has made me ever more giddy, ever more excited about my Google position, baby. I mean, we loaded the boat. Somebody stop me because I bought way too much Google stock. It's now the single largest stock position I've ever made in my entire investing career. It's worth over $40,000, which, depending on where you're at in your investing career, might be a lot or it might be a little. But right now, I'm roughly flat on the position. It's right at my cost average, and I'm super thankful for the shares I bought last week because I think people are underestimating the powerhouse of Google's AI software. And I think as the market starts to recognize this, as we get the alleviation, the fear alleviation from the current, fines for monopolistic behavior they're going through, the fact that people thought, search is dead. I think all of that is wrong, and I'm hoping it accumulates into some value into the latter half of this year, at which I'll take some profit. But time will tell, as this company should be larger than Apple with a better growth rate, much healthier balance sheet, but trading at a 20 times PE today still seems crazy to me. But broadly, if we compare the US to Canada, man, the global markets have largely outpaced the US markets just because of Trump, the tariff war. And I want to talk about it a little bit more in depthly today, as we also bleed into what I think of Canada, the current immigration policies, what it all means for the broader Canadian market as well, and just what excites me. So if you're on a path to financial independence, if you damn well one day want to retire early, join me by hitting that subscribe button, because the only thing I hate is that I didn't take $1 million leverage and buy the S&P as I went aggressively as I did, but I should have just used leverage, because man, every time I've done this, it's worked out fabulously. But God knows the day I use leverage is the day that doesn't work out like it has, because I mean, these major drops that we get are like little periods of hopium for me, where I'm like, finally discounts, where people are fearful and they go away too quick. I can't keep up with it. I just need more money. But nonetheless, you could have threw a dart at the board in the last couple weeks and have found incredible success across the upper weighted S&P 500 companies, especially with Google and Meta. I mean, I'm up over 30% now on the Meta position that we took on that major dip. Oof, man, what great buys that we were able to capitalize on here. But even Microsoft, Nvidia, with the exception of Apple here, yeah, I mean, you probably haven't been doing too bad in your portfolio. Like, we're hitting all-time highs in my chat group like every day of the week. If you want to join that chat group, by the way, go to kylelivingston.com. Link is in that description below if you want to chat with me on the daily outside of these videos. However, if we take a look at the Canadian markets, again, the mega caps of what have been primarily driving the growth in the TSX, especially with the recovery in TD. Congrats to anyone that had the cojones to pick up, the money laundering lawsuit case that really tanked TD stock, because it has been the primary, mega cap company in Canada that has been leading the performance this year, up 25% almost. And basically the other sector really driving it has been, some of the insurer players along with the non-energy minerals. I mean, the non-energy minerals have been pumping because of how expensive precious metals and commodities generally have been. So again, it's been great to be an investor in Canada. And let's talk more about that in a moment. But I will tell you, my only attention will be on AI for the next 1 to 3 years. I want to own the companies that I think are going to become the largest companies in the world. And as much as it's been fun watching gold rally to all-time highs, becoming this mega market cap commodity next to Bitcoin, which, Bitcoin is not something I play too heavily into because it's still kind of controversial. I'm not seeing a lot of integration into actual use cases, but the governments, there's a lot of bull cases for crypto today, but that doesn't get me as excited as say Google and Meta do. I think attention is the leading defining factor to future businesses and how businesses operate, along with AI integration. And Google and Meta both have that. They both have the attention driving platforms with YouTube, Instagram. Half the world is using one of Meta's platforms today, and both Meta and Google can see tremendous upside from the AI software they're integrating into these platforms that all of us are already using. And because Google is now switching to a subscription-based model, I really think they're going to start capturing what Microsoft has captured, which is basically using software as a service through a subscription-based platform where you stabilize your revenues and you get to see really incredible stable revenue growth, which has driven up the crazy value that Microsoft has demanded, now being the largest market cap company in the S&P 500, right? But something tells me Google and Meta, are going to continue to work their way up the ladder here, and time will tell if I'm correct, and that is where I'm making my big bet. But yeah, I'm shocked to see that Latin America, Europe, Asia, UK, Canada, and Australia have all largely outpaced the performance of the US markets this year. And again, that all has to do with Trump's rhetoric, and we know Elon is basically punching down at Trump, saying, look, if the market goes into a recession in this quarter, which is likely the US is in a recession because of, lack of travel, the tariffs, slowing down consumer domestic product, it's been painful, but it did lead to a good dip buying opportunity. But if you bought anywhere else globally, you've absolutely crushed it. And if we dive a little deeper into the sectors that have performed in the United States, and it's no surprise energy has been the biggest lagger of all the sectors. I mean, that should bring down the Canadian economy because, again, energy is a huge part of the Canadian sector. But thanks to the commodities, the other commodities, and, obviously the big banks have driven up some value, they've kind of outweighed the losses. And same in the US market, it's been information and technology and communication services, which is, again, quite a shock that communication services are the leader so far. I mean, look at Verizon. What a great stock if you picked up some of the dips, and what an even greater stock AT&T has been if you've been buying the dips over the last year and cost averaging, because man, it was almost like a straight decade of just down and to the right, followed by a really quick 100% recovery, where if you locked in a dividend yield of 7 to 8%, you've seen quite a healthy return over the last year. Even the 5 years, not that bad with the dividend. So congrats to people that stuck that out, as Canada hasn't seen the same growth in the telecommunications space with the exception of TELUS. TELUS has been the only outlier against Bell and Rogers. So congrats to anybody that bought TELUS. It's been one of my favorite telecom and Canadian stocks in the market. And I really thought Canada would have caught more of a whiplash from the slowing immigration and the tariff war, because as somebody mentioned here, there's been 1 million immigrants in the first quarter of 2025. Immigration did not decrease. 817,000 people so far, and more, as many people have been accounted for. And I'm not sure where you're getting this data from, but we'll dive into it a bit deeper, because my big bull case on Canada was we have monopolies. There's not a lot of competition when it comes to the big banks or our telecommunication companies. So if immigration continues to scale, and we were one of the fastest growing of the G7 countries for immigration growth, that they could only go through a few of these companies, that those companies would continue to benefit. And even though immigration has slowed down, our companies have still benefited greatly somehow. Even the banks, the banks have seen increased loan loss provisions thanks to the tariff war, but their revenue growth has been absolutely astonishing. But according to this, the Canadian economy added 8,800 jobs in May, a positive surprise relative to the modest loss that was expected. However, this pace of hiring is not enough to keep pace with the population growth. As a result, the unemployment rate edged up to 7%, the highest since 2016, excluding the pandemic. Unsurprisingly, the public sector employment fell as hiring of temporary workers for April election reversed, but weakness was also evident in trade-sensitive sectors as the U.S. tariff effects start to show. So basically what they're talking about with immigration is that it is slowing, but because there's still people coming in, we're not able to actually make up for all these people coming in for jobs, right? And we know this is, a big problem. We're in this really weird, peculiar phase where, housing is supposed to be a big problem, yet there's a huge amount of housing supply on the market now, especially here in Toronto. But I mean, if we take a look at immigration here, we can't, globally, there's a supply problem with new birth rates. So a lot of countries are making up with the birth rate slump by basically just immigrating people, right? Because, there's one birth every 1 minute and 26 seconds, and there's one death every 1 minute and 36 seconds. So it's kind of almost at parity. So that's why the government just immigrates like crazy to stimulate the economy. But if we read into the issue right now, Statistics Canada officially projected a 0.3% population growth in 2025 to be followed by a negative 0.2% in 2026. But according to CIBC, we believe that those projections are too low due to dual factors of overestimating the number of NPRs leaving the country. And NPRs are these non-permanent residents, right? Which have been a huge factor to the immigration growth and basically undercounting asylum seekers and others. Let's start with the overcounting of the outflow of, basically these non-permanent residents. The Statistics Canada narrative of the quarterly population reference for non-permanent residents in the country. However, Statistics Canada does not yet measure the departures outflow from Canada. Rather, they count expired permits of visas holders who are then removed from the resident population with 120 days of expiry. Therefore, expiring students and temporary worker visas do not translate into comparable population decline. Yeah, there's a lot of problems here, but again, we're not seeing the same extended population growth that we have seen in the past. So do keep that in mind. It is slowing. I think we're only allowing like 300 and something thousand permanent residents for this year and next year, but time will tell how all this pans out. These are very complicated issues. And again, I'm shocked at how resilient the Canadian economy has been on the back of the slowing immigration and this tariff war. And congrats to anyone that stuck through this, because I do see some concerning comments in my comment section, like, I sold my American holdings, it's not worth the stress or the risk. And I'm shocked by these comments because I constantly iterate the value of cost averaging and not trying to time or figure out when the market's a better buying opportunity, because nobody ever knows. The only thing I know is when the fear and greed index reaches max fear, you should be buying incredibly aggressively, and you should tamper off a little bit when greed starts to come back in the market like we're seeing now. Like, I'm not that excited to see the S&P go back toward all-time highs, but that's not going to stop me from cost averaging. I'm just not going to be as aggressive as I am, and that's why I lean more into stocks where I think there's better value setups to inch out those extra rates of return, like I see with Google, like I saw with Meta and some of these other stocks. We are seeing a double-edged sword, though, that is, not giving us the greatest returns as Canadians investing in the States, because the US dollar has slowly been deteriorating, and this is money being pulled out of the US dollar back into native currencies and native countries. And I think this is why we've seen excelled returns in global markets compared to just the US. And this does suck. I invest purely in US dollars, so it doesn't really concern me because I'm not converting my US dollars. But I mean, if you take a look here and you just zoom out on the 5-year, I mean, it's incredible to see that the US dollar continues to trend lower. And if you hold CAD hedged stocks like VFV, you're not going to see the same rate of return that you would see perhaps in the Canadian markets this year, because it's still down about 6% from the all-time high. And this is just because it's showing you the instant conversion that you're getting in the stock price, because it's the same. VFV is the same as VOO. They both represent the S&P 500. But if you look at the last year here, one's trading still significantly higher off its lows, right? Lower off its highs, if I'm saying that correctly. So it'll take a bit longer for that to recover, but you still have to go to where the best companies are. And regardless about how you feel about political rhetoric or all this stuff, I still believe that is in some of these US companies along with Canadian companies. But if you want to be diligent, just cost average in the global market ETFs. I am still continuing to do that as well. And as I take profits on Google and some of these stocks, most of my money will likely start to bleed into some of these global market ETFs. But this was just a brief update on a Monday. I'd love to know what you guys are doing in this market environment. I know we're all giddy. Market values continue to excel to all-time highs. If you want to join my chat groups where we're constantly talking about our portfolios, go to kylelivingston.com. Links in the description below. You can sign up to my WhatsApp group and so much more. But I'll pass the question off to you. I'd love to know what you think about all of this in that comment section.